From the trading floor of the NYMEX, I'm Jill Malandrino for The Street. And Zook, we could talk about gold being under pressure, the dollar's moving higher, the equity market's moving higher. But let's focus on mechanics today, not necessarily direction.
Absolutely.
So when you look at equities, there's a buyer and a seller, or the market makers are taking it into their book to control order flow. If it works that way with gold, which is an incredibly liquid and tremendous market, why does it continue to move down? How do the mechanics work with that?
Pretty much like a stock or any other traded commodity. As you gain long positions, you buy at 1,200. You have a pain threshold of $50. Once you accumulate the lower levels and it gets under 1150, then you say, I've taken too much and I want to get out, and I turn seller. At which point, if other people have done the same things as you, there's no one to buy from you, and causes selling only in the market, in which you hit big holes of illiquidity.
So where does it go? Who are you selling it back to then?
At which point you do have people that have guessed right at 1,200 and have actually shorted the market, right, which gives the ability to be someone there to buy and catch that falling dagger as it is plunging.
Right. So short squeezes can occur in a market as big as gold, just like you see with stocks.
Absolutely. When these short players are caught on the upside and a catastrophic event happened in the world markets, like in 2007, 2008, right, gold ran up to $1,900. That was basically caused by shorts getting squeezed and people buying ahead of them.
So what happens? How much lower can it go when there's just no more buyers to take those sales on the other side?
Well, because of the different time frame of traders, we have algorithms that really trade on a micro time limit in short time periods of literally seconds. And then you have day traders such as myself, mm-hmm, which do take risk, but at the end of the day will flatten up. Then you have shorter term traders between a week, and then you have your long term traders. All of these mechanical traders and different time frames create different ability to short and be long at the market at the same time. So as big shorts are looking for a significant move from perhaps 1,200 to 1,000, they're not going to be placing their buy orders until they think it gets lower enough. Whereas a day trader may sell at 1153 and want to buy it back at 1150, creating a much more liquidity. But once those day traders get overwhelmed, then there becomes these holes of illiquidity in which the longer term trade players have to decide where they're going to buy their shorts back.
So when we see the guys trading in the pit on the NYMEX here, are they flattening out every night? Are there all different types of traders in the pit?
The pit or electronic platform, which is used now, is very liquid on the queue up and down, and you can see that on what is known as a DOM trader every day. On these DOM traders, you can see the volatility when there is nothing there, and the DOM trader becomes very illiquid. But in times of positioning, the day traders and the micro traders definitely get out very quickly and are flattening up by the end of the day.
And if we look at the other metal complexes, copper, for example, which is something that you're very active in, does it have the same mechanics as gold? Will there be as much volume, as much liquidity, as much price action as you see in gold, for example, on a relative basis?
Well, recently there's been no volatility,
right,
in copper, so that's been a little bit of a downfall and doesn't make that the commodity du jour. But whichever the commodity is in favor that day, whether it's a crude oil, a gold, or a copper, that's the one that becomes focused on by the hot commodity. So even if you saw a trade in places as somebody says, hey, that's the hot thing at the moment, let's get in on it, that's what traders are going to look for. Okay. Make that the much more active commodity.
All right, thanks very much. We appreciate the tutorial there for us. From the trading floor of the NYMEX, I'm Jill Malandrino for The Street.